this computer. All right.
All right. Excellent. All right, all you multifamily maniacs. Welcome to the Southeast Multifamily Investor Meetup. This is a meetup where we're hoping that anybody who's interested in investing in the Southeast, whether you're an operator, syndicator, passive investor, if you're a broker looking to sling deals, if you're just wanting to get started in multifamily and you're wanting to find out more about one of the best markets right now, this is the meetup for you. I'm Heath Jones, my partner Hutch Marine Investor. We make H Squared Capital, and our mission is to help bring high net worth individuals together with veterans to help get them into deals, and so we can get retired service members their time back. And so we like the Southeast market. We feel that we're able to get a lot more deals under our belts in this market, as opposed to some of the hotter markets. We tend to shy away from, say, like the Atlantas and the Phoenixes, and we're feeling mixed about how we feel about Huntsville right now, because it's starting to turn into a Phoenix type of situation. But that's what we're here. That's what we're here to do. After our presentation, we are going to have networking. There's a lot of people here, so we will more than likely go into breakout sessions every 10 minutes. Practice your elevator pitch, get to know people. Don't be shy to talk about money. If you need money, let people know. If you have a deal, let people know. This is where it is. A lot of times you go into places and people are a little gun shy to talk about it. Don't feel that way here. If anything, we try to connect people with people who do have money, with people who have property management in the area you're looking at. If you have questions about somewhere and people are in that area, go ahead and ask them. You got anything else, Hutch, you want to add before we get started?
I know. So I see a lot of folks here who are actually on the active duty, active investor side, on the active investor side, so this information is going to be vital to us, because look, we know our investors who are committed to investing in deals that we presented to them, but the ones who are kind of on the fence, who need to learn a little bit more, we have to be able to communicate effectively to them, to get a deal past closing. And that's what Bryan does. Bryan is magically doing that. People pay him a lot of money to actually have, a day with them, and he's choosing to spend about an hour and a half with us, so we are definitely locked out, so start taking notes, take some question down, and we will definitely have a Q&A section before we roll into the networking session. So without further ado, Heath.
Absolutely. And Hutch hits the nail on the head. It's about the communication, right? So I went to my first professional conference back in 2002, and I've sat through at least 2 or 3 a year every year since then. Not so much here. They've all been virtual for 2020, but I can tell you without any qualms that there are just some people who cannot communicate. It could be the sexiest idea, the newest, I'm a scientist, the newest science, and you're just sitting there and you're like, I am so ready for this presentation to be over. One thing you're going to have to learn how to do is communicate your passion to the people you want to help, to the people that you want to join together. And so if there's one thing that Bryan does very well, it's communicating that passion. We had the privilege of seeing him speak at the Best Ever Conference in Keystone and talk about lighting up the stage and getting a lot of people enthusiastic about, bringing money together and buying more real estate. So a little brief background about Bryan. He's the publisher of Accredited Investor Magazine and Self-Directed Investor Magazine, and an expert in real estate investing, capital raising, and self-directed IRAs and 401ks. You can find his work published online in Forbes, Entrepreneur, TheStreet.com, and much, much more. Bryan has also taught continuing education for tax law to attorneys through the University of California. He's also considered to be among the world's elite financial pitchmen, with many highly reputable syndicators relying on his expertise to aid them in funding their projects. And his projects routinely reach their full subscription in only hours or just minutes. And I have to steal a quick little anecdote that it's not mine, but our legal team was introducing Bryan. We also saw Bryan speak at one of their webinars, and they were talking about how they paid this guy bukus of money to come in. He comes in one day, gets all the material together, puts the presentation together, and then Bryan was like, "You want me to give the presentation?" And the lead sponsor, the lead attorney, was like, "Sure, I'm paying you. Why am I going to do it? You do it." And while he was giving the presentation, before the presentation was even over, their email was bing, 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 with soft commits, and the presentation wasn't even over. And not just that, the lead counsel, the lead sponsor, even went home that night and was talking to his wife, and he was like, "I don't know. I think we should put another 75K into this deal while we still have a chance." So without further ado, I'd like to welcome Bryan Ellis to the stage. And if you have questions, put them in the chat. Hutch and I will be monitoring them. And take it away, Bryan. Do that magic, do the voodoo that you do.
Do the voodoo that I do. Hello, folks. I'm Bryan Ellis. Thank you for that very kind introduction. And because you said what you did, I can skip the part of the presentation where I drone on and on about my qualifications and such. So for now, since time is short, let's get straight to the heart of the matter, shall we? And that is, why have I been, and why can you be, by extension, very successful in building presentations that raise millions of dollars in capital? I do that routinely. It can be done repeatedly. And my friends, the answer to that is all about understanding how the human mind actually really works when making decisions like these, big, important decisions that involve risking a lot of money. The way those decisions are made is radically different than what you and what everybody else in our business assumes that it is. And I shall now prove that to you. So take a quick look at this. I'm going to share my screen with you. Let's see here. There's no need to look at that shockingly handsome fellow. Let's see. All right. You guys see my screen okay? Just shake your head yes if you do. Okay, cool. Yes, all right. Have a look at this image, folks. This gentleman is a famed Swedish tennis player from the 70s and 80s, Bjorn Borg. Take a close look at this. There's no funny business going on here, except that your mind is playing a pretty big trick on you right now. You see, your brain knows what a face looks like, and it interprets this piece of artwork accordingly. It looks like a face, it's shaped like a face. To my mind and to yours, that's a fairly normal face. Except it's almost exactly opposite of a normal face, because this face is not convex, with a nose and lips that point outward, for example. Rather, it's concave, meaning it's an indention, almost like a plastic mold taken of a face. It's totally pressed in, not at all like any normal face you've ever seen. But your mind told you otherwise, didn't it? Don't fret. I mean, my mind did the same thing. Everybody else's mind did the same thing as well. So you might think of this as an optical illusion, but it's much more than that. It's a cognitive illusion. You see, your brain, as a very standard matter of course, simply does not behave like you expect it to behave, or like you hope it will behave. You think, you hope, you prefer to believe that you're a logical decision maker, that you take the facts, that you process them, and then you come to the most reasonable decision. Hey, I think that about myself too. We all do. And I'm wrong. And oops, that was a very, very professional move I just made. It was kind of like a subliminal move to suggest what's coming. Or I just screwed up. I mean, one of the two, you can choose. But we're all wrong, folks. That's not what we actually do. I'm wrong, you're wrong, we're all wrong. And there are two big problems here, folks. The first of them is this. The first is that given obviously correct information, we tend to draw obviously wrong conclusions. And I will prove this with your actions. How about that? You are your own best evidence. So here's some proof. It's clearly a bad idea for your health, is it not, to eat fast food? It's clearly a bad idea for your health to do anything other than get plenty of exercise. There are any number of things that are clearly a very bad idea for your health. But I'm betting that each one of us can look at something that we did today that was probably not ideal for our health, despite the fact that you know that to be the wrong decision. Second, what we also do is that we are incredibly bad at recognizing when we are operating from bad premises. A premise being, of course, a piece of information upon which we base our conclusions. We're going somewhere with this, folks. Follow me along. I'm showing you how wrong your thinking is, because it's not that you're wrong. Well, it is that you're wrong. I'm sorry. I love you, and you don't love me yet, but that's okay. You're going to know that I'm right. But I am going to show you some stuff that's going to make it possible for you to raise a lot more money. So pay close attention here. We're incredibly good at coming up with the wrong information on which to base our decisions. For example, what do you see before you right now? Well, there isn't any trickery here, folks. It's a drawing, yes, but clearly that's a dog. Does anybody disagree with me that that's a dog? It looks kind of doggish to me. Okay, so I ask you, how many legs do dogs have? Well, we can count them right there. 1, 2, 3, 4. So dogs have 4 legs. Yep. Pretty simple stuff. Everybody with me? Shake your head, yes. Okay. Dogs have 4 legs. No kidding. So if you see this fellow walking down the street, what do you think? Well, it looks like a dog to me. How about you? Looks like a dog. But there's a problem. This fellow has only 1, 2, 3 legs. And we've already established the fact that dogs have 4 legs. And this fellow, even though he looks identical in every other way, well, this guy has only 3 legs. And since we know that dogs have 4 legs, well, logically, we have to conclude this creature is not in fact a dog, is it? Even as I say that, my friends, you know that's absurd. We have a bad premise here. It's not that dogs have 4 legs, it's that dogs almost always have 4 legs. And there's a distinction in those two premises. But you all accepted the one I gave you just a minute ago, didn't you? Dogs have 4 legs. And 30 seconds later, I gave you something that is logically valid, but clearly untrue. Everybody with me so far? Now, this is just an example of how easy it is for people to accept premises that are actually wrong when they're thinking, when they're making decisions, because it just happened to you. And these two realities, the fact that we're so willing to draw bad conclusions in the face of obviously correct information, like when you're making health decisions, for example, and the fact that we're so easily led to using bad premises upon which to base our investment decisions. Well, there's really only one conclusion that we can draw from this, and that is that logic is better for confusing people than for persuading them. And that is not what you thought coming into this. That's right. That's relevant to you as a raiser of capital for this reason. If you're like everybody else, and you are, When you go to build a webinar or a pitch deck or other tool for raising capital, you automatically use the damn the torpedoes approach. You throw as much information at your prospects as you can. I mean, tell me if this feels familiar to you. When you're making a pitch, you throw every statistic, every resume item, every KPI, every year of experience, every single piece of information you can think of which supports the idea that they should jump into your project. And you probably do this in the form of spreadsheets, probably. And you probably put a few spreadsheets on the screen and that sort of thing. And you hope that simply by overwhelming your prospects with information, that their logical faculties will kick in and they'll decide to invest with you. Right? Does this sound familiar to any of you? It's what everybody does. And you know, that will work for some people. You will be able to raise some capital that way. I don't deny that. Some, excuse me, some of your prospects, some people's lives are, they are operating on a sufficiently even keel at any given moment that they are able to make somewhat emotionless decisions. Some people can do that. But those people, your prospects, they are few and far between who behave that way. I'm not one of those people. You're not either. Very few of your prospects are either. Almost nobody makes purely rational decisions. And that is why I can raise capital so effectively even when others can't. The gentleman that Heath mentioned to you, very smart guy, very reputable guy. He's a client of mine. He's a friend of mine. He's a securities lawyer. He's a syndicator. Very bright guy. I have nothing but positive to say about the guy. But before he called me for that experience that Heath described, he had used his own database and raised, I think they'd raised about $6 million in the preceding 6 weeks. And he called me and said, you know, we're kind of up against a wall here. Our closing is coming up in 10 days. We got to raise quite a bit more. And I have completely worn out my database. We're not getting any more money out of my database at all. Well, we raised a lot more money out of his database over one weekend. We raised about 50% as much as he had raised in the past 6 weeks. We raised about 50% of that amount over one weekend. Why? It was the same audience, same offer. Well, we communicated it very, very differently. And the one thing that's key to know is that this, for all of us, we all begin with bias. We all begin with bias. And bias just means that there's a decision that your prospects are leaning towards from moment number one. You know, if you can think of, if you could look at my video right now instead of the screen. In fact, I'm going to turn off the screen for a moment because I got a call. I don't know if you guys saw me just a little while ago. I got a call 2 minutes before we started this, and that call changed what we're going to talk about tonight. I think you're going to find it quite interesting. So I'm going to go off script here just a little bit. Hutch and Heath still the same, still going the same direction. Please don't be too nervous. I promise you we'll get where we're going. All right, so I'm going to stop sharing my screen, and now you should be able to see me a little bit better, I would think. All right, so here's, if you think of this as like somebody coming into a webinar or a pitch that you're doing, and this represents 50-50. This way they say no, and this way they say yes, all right? The thing is that that's not the way it is. People don't come into your presentation like this. If this is yes, they come in kind of like this, leaning mostly towards no, okay? And that's just the reality. Just think about it. The direction that they're leaning is almost certainly that they're assuming that they will not participate in your project. It's sad, but true. And it makes sense if you think about it. Unless they know you and your background and your experience, and they have existing reasons to be overwhelmingly confident in you from moment number one, why should they assume anything other than that you represent more of a risk than an opportunity? That's reasonable, even if your deal is a totally slam dunk deal. So what must we do? What must we do? Well, we've got to speak to our prospects in a way that is compatible with how they and we and everyone, how we actually think. How do we do that? So from here on, what I'm going to do is just talk to you a little bit. And my friends, we're not going to be together very long. I want you to listen very carefully to me. That what I'm about to share with you is the core of why so many clients pay me $25,000 a day, plus a part of the deal for most of them, in order for me to write their capital pitch presentations. So we're going to do this in the form of a case study. And this is a real-time case study based on a phone call I got just a couple of minutes ago. So most of you raise, probably all of you raise for multifamily deals. Yes, is that a correct assumption? Okay. We're going to talk about an asset class that's a little harder than that. Because if it works for this asset class, it'll work for multifamily. It does work for multifamily because I've done it over and over and over and over and over and over and over again, and got lots and lots of clients to prove it. We're going to talk about oil and gas tonight. Okay. Now, folks, feel free for just a moment to go from muted to unmuted. I'd be happy to hear from you. And Hutch and Heath, I don't know if that's something that I can control or if I can make that possible for them to unmute themselves. But here's my question for you. Whether you know anything about oil and gas or not, when you think about the risk of oil and gas investing, do you think that that's high or low? What do you guys think?
High.
High, yeah. It is absolutely high. Like, if you think that, you're right. Nobody really knows what the statistics are, but it's generally believed that somewhere between 7 and 9 out of every 10 drilling deals, if you get involved in a drilling deal, you're going to lose all your money. That's pretty crazy risky, right? Everybody with me? Now, what must that say about the remaining deals? It's a lot of money.
Very profitable.
Very, very profitable. That's right. So I do a lot of capital raising for oil and gas deals. And let me tell you how those deals work. I'm setting this up for you so that you can all understand the context, and then we're going to figure out a solution to this thing just as a good case study together, because it'll be very directly applicable to anything that you happen to be doing. So the way that it works with oil and gas deals, just for some context, is somebody goes out, normally it's an oil drilling company of some sort, big, small, in the middle, whatever, it doesn't really matter. They go and they do some research and they figure out where they think there might be some oil in the ground. Then they go to people like me and you and others and they raise capital. And they take that money and they drill a hole in the ground. And this is a fairly quick process too. Like, generally it's known within weeks whether this thing is going to be a complete failure or not. So they take that money, they drill a hole in the ground, and they find out quite promptly whether they were right or wrong. Like there's no gray area to it. Like, it's black and white. They were right or they were wrong. And if they're wrong, you've lost all your money. And that is where the vast majority of the risk in oil and gas investing is, right? I mean, when it's possible for you to lose basically all of your money in just a few weeks and do it that quickly, that's where the vast majority of the risk in oil and gas investing is. Does this make sense to everybody so far? Just shake your head yes, if it does. Okay. And this is a real risk. I'm not trying to say anything other than that. That is a real risk. That can really happen. So imagine with me, if you will, that it was possible somehow for you to invest in an oil and gas deal. I'll give you the specifics on the particular deal I'm talking about right now, because it's a real deal. In this particular project, it was a $2.7 million raise, divided into 20 units of $135,000 each. Now, I want you to listen to these numbers, because $135,000 investment, that's fairly typical, in that range for multifamily deals. I'm sure you agree. Like it may be 50,000, it may be 200,000, but somewhere in that range is pretty typical. Yes, we're all on the same page there. Okay, so this one's $135,000 per unit, which means basically 5% of the limited partner side, so to speak. And the expected return for this thing is $8,800 per month, starting roughly 90 days after the funding of the project. Did you guys hear that? $8,800 a month? Like, does that make you go, dear God? Like it does to me every single time. And I own several of these things. Every single time, like I get the check in the mail and it's like, dear God. But here's the thing. It's because there's a lot of risk in those projects. But what if you had the opportunity to invest in one of those projects, not before the well was drilled? Remember, that's where all the risk is. You put your money in, drill the hole. If there's oil there, great. If not, you just lost all your money. So let's call that zero moment, okay? Normally, you have to put in your 135 grand before zero moment, and you don't know what's going to happen. But for some reason, a twist of fate, you get to wait until the day after zero moment, okay? The day after zero moment to decide whether you're putting your money in. In other words, all the holes have been drilled. There is oil. It is an absolute fact. There's scientific, like hard evidence, like there's a hole in the ground and there's black stuff coming out of it. Like we know there's oil there. And you get to invest the same amount and get the same return at that point, rather than before the zero moment when you don't know. Y'all with me on this? How this is a radically different risk proposition? Radically different. Now, it's not that it's zero risk. There's always the risk of an act of God, or, that laws could change or whatever. So it's not zero risk. But the risk, can you see how the risk before zero moment is really high and the risk after zero moment is really, really low? Everybody with me on this? And this is not a logical trap. That is just the truth. That's the situation that I face right now. You see, I got a telephone call just a few minutes ago from my client that I work with about this particular project. And it's kind of an unusual sort of situation. We've got the project that I just described to you. Those are the real stats, like the real numbers. And we had two people who had committed to buying units who had something bad happen to them separately, like two separate people today. And now they can't buy those units. Now, this is kind of an interesting situation, don't you think? Because I get to go out there to the world and make a pitch that basically sounds like you get to invest in oil and gas, have all the benefits of it. And oh, by the way, it like not only, and I want you to see the picture here very clearly, folks. Not only is it the case that the holes have been drilled and we know there's oil in the ground, Not only is that true, but for one of those wells, there isn't one reservoir of oil in the ground. There are 4, which means on that particular well, it's like we have 4 different oil wells. We're probably going to be able to pump that thing for 30 years. Now think about that. So that's what I have to pitch. Now, does it sound like this is going to be an easy sell to you? What do you think? What do you guys think? I'm really curious. Actually, I guess I could probably.
It should be an easy sell.
Come again?
It should be a very easy sell because it's 4 patch 4 oil reserves right there.
Yeah, it should be a very easy sell.
As long as you can send the paperwork to prove it, yeah.
I'm sorry?
As long as you can send over the paperwork to prove it, not a problem.
Oh yeah, sure. And you know what? Rationally, it is an easy sell. But have you ever in your life heard of a project that returns that kind of financial result with a very, very, very low level of risk like that? Have you ever heard of that?
No.
I haven't. Never once. Do you think there's a pretty good chance people are going to see this as too good to be true? Yeah. And now we're starting to think in terms of the way people actually think. You see, I can paint you guys a picture, and I kind of just did. I can paint you guys a picture about the facts of this situation. And there are more facts that if you knew them all, the attractiveness of this deal doesn't become less the more you know about it. There are more facts that make it even prettier. Not the least of which is that you get to actually deduct 100% of that investment off of your income taxes. Bam! This ain't like real estate where you deduct it largely off of your passive or unearned income. This means that, like, if you got a $200,000 income, you're going to get to reduce your adjusted gross income by all of that. Now, actually, this year, you're only going to get about 100 grand of it. You're going to get the other 35 over the next couple of years. But you get to deduct 100% of that against your income taxes. Pretty sexy, huh? It just gets better and better. But you know what? This is not going to be a hard thing for me to move because I've only got 2 units, and I can. Probably what's going to happen is 1 or 2 of you are going to message me later tonight and say, can I have one of them? But short of that, I'm going to make a couple of calls tomorrow and find somebody who wants to buy them. But let's just imagine that I had a whole project, like all 20 units were this. My friends, I could never in a million years go out and make a presentation that said, basically, you're going to get rich off of this thing. All of the facts are in order. You can't lose. I would never say that anyway, because that's never true on any deal. But this is an automatic winner. Jump in. If nobody would believe me. So what do we do instead? Remember, people don't come into a presentation or an opportunity pitch like this. They come in kind of like this. They're like 70, 80, 90% against you to start with. So what do? We start with a shock. I want you to think about it. You're walking through the woods, maybe with your kids or maybe by yourself if you happen to be an outdoors type person, and you see something slithering at your feet. What do? You jump your ass backwards is what you do. I don't care how composed you think you are. I don't care how much you know about the woods. You're jumping backwards because that thing is a snake. Only, turns out it wasn't a snake. It was a stick that somehow got shuffled and you thought it was slithering. But you still responded instantaneously just like that. You had a natural bias. Everybody has a natural bias. So what we have to do is create that bias from the very start in our presentations. Everybody with me on this? Does this make sense to you? So the way that we do that is that we start out our presentations not with hard data, not with an attempt to overwhelm anybody with facts, but with something that's going to get their attention. So, for example, if I was making a pitch about this, I would probably start with, I usually like to do it up front. I call the model that I use at the front 3 shocking facts. And I like to come up with 3 facts that frequently are counterintuitive or actually seem to not support my case. And I start with that. One of the facts in this case would be something like, shocking fact number 1, 9 out of every 10 oil and gas deals result in investors losing every single penny that they invest in those projects. And so you probably should not invest in this deal. Anybody have any guesses as to why I might say something like that at the beginning of a presentation where I actually want them to invest in my deal? Anybody got any ideas? Going once.
Reverse psychology.
Yeah, it's reverse psychology, but it's a little bit more specific than that, but you're definitely on the right track. What do people want more than anything else? Well, what they want is what they think they might not be able to have. Okay?
Yeah, take their fear away.
Oh, no. See, what we want to do is exactly opposite that. We want to find their fear and turn it up. We want them to almost be shaking, not literally, but in a mental way. We want them to be terrified by the end of this presentation that they don't get to play the game with everybody else. All right? What do people want? They want what they can't have. So this entire presentation is about, somebody put the comment in, fear of losing out. Yeah, it's a lot about that. It's about fear of losing out. And so that's where I would start my presentation for 2 reasons. One of them is they already think that oil and gas is really, really risky, don't they? And they're right. So why would I fight against what's true? I tell them, hey, you're right. You're right. And so you probably shouldn't invest in this thing. Because, by the way, I've only got 20 spots available. And the last time I did a raise for a project like this, it filled up in 3 hours. So it's probably not going to be something that's a good fit for you anyway. But I'm going to share with you some reasons that it might be for a very special subset of you. Now, what have I done? I've agreed with them about the risk of this thing. I've established scarcity, like there's only so much opportunity. And I've established some exclusivity, like it's only available for a special subset of you. Who doesn't want to be special? Well, nobody. Everybody wants to be special. Everybody wants to be in the in crowd, right? And so what I would then do is add on probably 2 more shocking facts. One of them would probably be something along the lines of, if this turns out to be a good fit for you, we're projecting that you're going to make about $8,800 a month, roughly 90 days from now. I mean, 90 days from now, you're going to be able to once a month go out to your mailbox and there will be a check there for roughly $8,800. It might be $7,000 one month. It might be $12,000 one month, but that's kind of what we're expecting as the average. Well, that's pretty shocking. Most people aren't accustomed to that. Okay, I'm going to come up with one more thing like that. And now, what do you think? After they've heard these things, that yes, there is risk in this, but we're actually going to reduce that risk for a lot of you where it will make sense for you. And the income is going to be incredibly high. And probably my third shocking fact would be the astounding tax benefits. Now, what we have is a situation where they came in like this, like 90% against you. But now they're curious. They're not convinced, but they're curious. They're probably 60% against you now. You still got long odds, but now the odds are much better than they were just 5 minutes ago. My friends, does this feel like it makes sense to you? Like this might actually work with the way people's brains actually run? What do you think? Shake your head yes or no. It does. It really does. The rest of the kind of presentations that I build, you would be shocked at how little data that we include. Not because that data is not necessary, but because it is an impediment to decision making at this point. You see, it's kind of like if you were in college and you were choosing a class to take. The way that most people do capital raise pitches, it's akin to demanding that the person choosing a class be able to take the final exam right there before they take the class. And that makes no sense. You got to make the pitch. You got to give them the reasons to feel good about this thing before the specifics of the data, the deep data, mean anything at all. You see, if information appears inside of your PPM, or if there are spreadsheets, or if there are other pieces of content like that are physically included in your PPM or in other documents that they will be receiving, should they show interest, the chances are you shouldn't be mentioning that stuff in your pitch presentation. They're going to get it somewhere else. But what you should be mentioning is the hope, like the promise. What's the big idea? Like for me in these oil and gas deals, I haven't even told you guys the best part. But for me, like, it's easy for me to make these presentations, even the ones where, like this situation that I just described to you, where we have these 2 units where you can invest 135 grand, and there's, we already know that everything's there as we're hoping. That's unusual. Like, that's not typical. Okay. But even without that advantage, there's some things that we have done that have sliced that risk so far compared to what it normally is, that, like, for me, like the big promise, the big hope, and it's really easy to get excited about is, you know what? One deal can change your life, like in short order. I mean, think about it. If you suddenly had $8,800 a month extra coming in 90 days from now, would that change your life? Well, damn straight. There are not a lot of us that can say no. Right? That's a lot of money. Okay. So for me, the big promise is there's a lot of money here. You don't have to do anything to earn it. Just make the investment. And oh, by the way, you'll get crazy good tax benefits. Okay. And there's also some strategy stuff behind it that makes the risk really, really, really low, or comparably low, I should say. But here's the thing. I don't spend a lot of time talking. In fact, I spend 0 time talking about geology, 0 time talking about petroleum engineering, 0 time talking about the machinery that's used in pumping oil. None of that stuff. All I do is help them to understand where they are, where they could be, and why it's way more likely than not that they will get there. And we're going to wind down with this, and I'll probably turn it back over to Heath and Hutch here in just a minute, but we also do something else very, very special. And I want you to listen to this, my friends. This is very different than probably any of you have ever even vaguely considered. We actually consciously make sure that we do not give them all the information they need. That's a little different, isn't it? We do not give them all the information they need in that presentation. Now, in the PPM and on the other documents, yes, absolutely. We don't withhold anything out of that stuff, okay? But there are some little factoids that we very purposely don't tell them to keep their curiosity high and to give them something to ask about. Like, that's one of the more powerful tools you can use, is to, whenever you are doing a pitch, you can tell your prospective investors, hey, when you speak to me, or when you speak to the team here about participating, be sure to ask me about X, because we haven't even talked about that, and that's going to blow your mind. It's going to make a great deal astonishing. Well, now they've got one more little thing that's going to tip them over the edge to wanting to talk to you. And that's what's important, is to paint the picture of hope, of promise, and to get them really, really curious and a little bit jealous preemptively, because they might not be able to get in if they don't move quickly enough. It's all about painting the picture, telling the truth, by the way, because we do happen to operate in a business where it's a go to jail kind of business if you lie. So we don't want to lie, ever, 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 ever. But what it is, so we want to paint the picture, show them the promise, put some hooks in so that they have additional reasons to reach out, and then take it away. Because people want what they can't have. And there are a million ways to do that. Would you like a rather clever way to do a takeaway of your project without having to take away anything? Would that be of interest to you? Shake your head yes or no. Okay. The time from March through, right after the shutdown happened in March, the 90 days following that were the busiest I've ever had. Actually, maybe the 120 days following that were the busiest I've ever had. Investment providers wanted to jump on that opportunity like you wouldn't believe. Now, I had the job to raise a lot of money during that period of time. Excuse me. And one way that I did a takeaway was this. I flashed up an image of an article that appeared in the Wall Street Journal. And this article said that I don't recall specifically, but some ungodly amount of money, hundreds of billions of dollars, had been raised in the past 30-ish days or so by people doing syndications, mostly by folks doing distressed asset syndications. And it talked about one particular group down in Florida that they raised $1.2 billion in, I think it was 3 weeks, something like that. And normally this would have taken them 18 months. They said so in the article. So here's how I use that information. I said, my friends, $1.2 billion in 3 weeks, $1.2 billion. That is astonishing. All we have to raise is about $5 million, not $1.2 billion. And it's going to move quickly. And I hope you get the opportunity to be one of the people who participates. And by the way, that's going to come in chunks of $100,000 because it's a $100,000 minimum. It means we need 50 people, 50 investors. That's it. And there are about 300 of you on the line right now. Not in this group tonight, obviously, but to the group I was speaking to. There are about 300 of you on the line right now. So my friends, there's a very high probability that this opportunity comes and goes in the next hour. Now, do you all see what I did there? I compared what we were doing to a much bigger number to make what we were doing look small in comparison, and reduced it down to, we only need 50 investors. That sounds like a really small number, and it is. My friends, to be really good at this thing of raising capital, what you got to do is you got to think about how people actually think and work backwards from that, instead of assembling large amounts of data and working forward from that. When you do what I've just told you, you become kind of a Jedi master at persuading people to invest in your projects. It happens quite naturally. And that's what I've got for you tonight. Heath, Hutch, it's all yours.
Oh man, Bryan, thank you so much. I do have to say, I completely agree with the presentations with less is more, as I was mentioning, and I'm sure other professional conferences for other people who do things other than real estate, which I'm sure is most of us on the line. At least I'm just going to do science because science is what I know. People feel compelled to tell you everything because they feel like they have to come from a position of knowledge and a position of mastery of that field or whatever they're showing. And, you know, for the most part, it's just like you said, if I need the details, I'll go to the paper when it comes out. You know, I'll see the article when you publish it. You know, like I cannot follow your story right now because you're overburdening me with numbers, figures, and facts. And so one approach that I've taken over the last, it probably started about like 2013 or 14 is I tried to take all that away and just give, you know, first I tried not to use font that's smaller than 22, size 22 font. And I think that a lot of times people are just, like you said, just can't make a decision or even know what to follow sometimes because there's so much being thrown at them.
Yeah.
Side note, I was crunching the numbers. We did have 25, we had like 28 on the call, but as it went down, I adjusted it in my Excel sheet. 135K with 25 of us each putting in $5,400 and splitting up that $8,800 by 25 would be $352 a month, which would give us $4,200 a year on a $5,400 investment, which is a 78% return. Not only that, you would get your investment back after 15 months.
Yeah.
That is a crazy deal. So
it is.
I guess if anybody has any questions, unmute your mic. Go ahead and hop in. I think Lawrence is like, let's do this. I'm ready. I'm with you. That you know, I definitely do feel that I would be in the camp of this is too good to be true. I'll let someone. Because like as good as everything sounds, it just feels like there's some catch. It just feels like there's some risk. So yeah, as you're presenting this and you know sort of those fears that are coming up in those people, you're saying to kind of counteract those with the letting them know, hey, this is no BS. And someone else is going to see that it's not BS, and then you'll be missing out. Is that kind of the?
Yeah. So the natural thing is to think if a person doesn't believe, or let's use the too good to be true thing. If a person thinks that this is too good to be true, then my job is to convince them that it's not too good to be true. Well, that's just not actually necessary. What is necessary is to, again, take them from being heavily against you, or heavily, you're like really, really being convinced that it's too good to be true, up to maybe where it's, 60-40. And see, we're stacking psychological factors here, and you make it very clear to them why it rationally makes sense, because reason and logic does have a role to play here, but it's not a role on the front end. We have to kind of shock them into even being willing to listen. And then getting back to the notion of too good to be true, all we need to do is get them where they're not like 90% convinced of that. Maybe they're only 50% convinced of that, for example, and inject into them a very true concern that they're not going to get to play this game anyway, because there are only 20 spots, or, XYZ, or there are other qualifications that might be necessary, whatever. And so you may not get to play anyway. And so we're actually trying to create cognitive dissonance rather than relieve it. But if we create it constructively and purposefully, what happens is that the one thing that we created, like the fear of missing out, will be louder in their mind than, oh, this is too good to be true. Okay. Now, this is done by using multiple strategies inside of the presentation. And when you stack all of this stuff on top of each other, it tends to be wildly persuasive. Does that make sense, Heath?
Yeah, absolutely. I really liked what you said about starting out from a place where everybody connects and where they are, and then, showing them where they could be, and then providing that hope that it's going to get there. When you're providing that hope, what is there some tangible evidence that you give them about the deal without, sort of?
Oh yeah. So, it might be interesting for group. Next time I actually do a pitch for one of these projects, I'll let you guys know, and you can send a notice out to your people if they're interested to come and see it. But there is real content in my presentations. For example, you know what? If you can you give me 30 seconds to find something, and I'll show you you can probably see on my screen. I'm trying to let's see if yeah. Are you seeing the screen move through quickly?
Yes.
Okay. So look at this screen. I use this screen to tell people how oil and gas really works. Well, you dig a well, you hope there's oil there, and when you're really fortunate, and this is a case study of another project. But when you're really fortunate, there are lots of or several reservoirs, and if you do it right, you can hit not just the one down here at the bottom, but these as well, and yada yada yada. So I give them some stuff to think about. I do give them some content. I do give some explanatory background, but we don't start there, and we don't go deep. This is the time. At this point is when it needs to be conceptually appealing, but not a dissertation.
That's right.
Right? This is all about getting them to ask for more information. Really, what the idea of the webinar or the pitch deck is both to appeal to show the reason that this should be appealing to you, and also to completely turn you off if you're not the right fit for this. And so generally there are, at the very front of my presentations, I do 3 shocking facts just to get people to go, oh my God, and there are 3 shocking facts in every project. It's not just oil and gas. There are 3 shocking facts in every single multifamily deal. Like I do this on every project. So we start there, and then I take a very brief amount of time, like 2 sentences, to tell them about my background, because it's important, but it's not terribly important. They don't really give a damn about me yet, and they shouldn't. But then the project, the presentation from there is really 3 plus 1. So section 1 of the 3 parts, the central part of the presentation, section 1 is, why does this asset class make sense? Because you probably are assuming, whenever you're doing a multifamily project, for example, you're probably assuming that everybody who's listening to you knows why you should be investing in multifamily. Not true. So we start there. Then the next part is why this particular project, okay? So we give a little bit of detail there about why this particular project, and we do give them some facts, like it's located in this area, and this is why this is a good area. Here's roughly what we expect to do with it, and here's how we expect to get out of it and make money. That's kind of the overview. And then the third part of the primary section is qualifications. Now you know it's a good deal. Let's find out if you qualify to play. So that's where we talk about accredited investors only and what the cash requirements are, et cetera, et cetera. And somewhere along the way, I put up a little bar at the bottom of the screen that says, if you feel that you qualify, go to this URL and set up a time to talk to a member of the team. That's the core of the presentation. But then at the end, I have an FAQ, like a Q&A section. But it's a hard-coded Q&A section. See, I know the questions they're going to ask. They're always the same questions. And so I put those questions in, and I write the responses ahead of time, and that's another little secret, guys, is I write every single word of my presentations. Like I script every single word before I make a pitch, like every word. And that really matters. That's one of the things that separates the pros from the not so pro. And at the end, I'm doing these Q&As, and everybody just assumes everybody just assumes that I'm answering questions that have come in during the presentation, and probably they have. They don't know that I've written all that stuff up ahead of time, even though there are slides on the screen that are pre-prepared. They never make that connection, but I do it that way because I want to ask these questions or answer these questions in such a way where not only can I reiterate the information they need, but it can lead naturally to my giving them a close again. Remember, there are only 20 spots available. 17 of them are taken already. If you'd like to apply to get one of the remaining 3, go to the URL at the bottom of your screen. Okay, the next question is this, right? So that's kind of how our projects our presentations are structured. 3 shocking facts. Why this asset class? Why this project? Do you qualify? And then Q&A. But
Hey, Bryan.
The real magic is in the words. Yes.
Do you have a typical size for your slide decks? Like, 8 slides, if, because I've heard things throughout different things, interactions where it's like, if you can't tell me what you need me to know within 8 slides, don't force me to listen to 20 slides worth of.
Yeah, that's ridiculous. No, the magic is in the words. And I sit down and I write out the presentation word for word before I think about slides at all. Slides are more likely to cost you investors than they are to gain you investors. So I write the words out very carefully to begin with, and then I build slides around those, but limited to 8, that's That's ridiculous. Like, I don't know why anybody would say that. Now, Hutch, I think you were trying to ask something, and I didn't get you.
It's good. Good information. But I was going to say, before we get into the networking, you still teach those 1-day capital raise classes?
Yes, I do. I have.
Talk about it for 3 minutes.
Come again?
Can you take 3 minutes to talk about that?
Yeah, sure. Let's see. Let's see. I'll do that, and I'm going to put that back up on screen so that if anybody's interested in that, they can reach out. I forgot because the seminars are kind of not certainly not the primary part of my business, not even the secondary part. They're kind of like roughly maybe the third level of my business. So it's not where we focus, but yes, I teach a 2-day seminar about this every now and again, not terribly frequently, where, and I wish Ruben Greth was still here. He's been through it, but it's, so you guys can ask him about it whenever I'm not in the room. He can give you an honest assessment. But yeah, it's a 2-day seminar where I teach my model, which is called the 1-day capital raise. I know it's odd. It takes me 2 days to teach the 1-day capital raise. But I have a 5-step model that I've been using for years and years for raising capital. And step 1 is lead generation. Step 2 is the webinar. Like that's the big thing. If you get the webinar right, the rest of this stuff is easy. Step 3 is the disqualification call. So once they watch the webinar, what do you tell them to do? Well, in my model, what you do is you have them set up an appointment with you or a member of your team, and you talk to them, and basically you just go through a script on that call to make sure they're the right fit. Okay, so that's step 3. Step 4 is actually having an event. Now this is pre-COVID. Now we're doing these virtually, but pre-COVID, and we'll get back to this at some point because it is more effective live, even though, man, we've been very successful virtually. But step 4 is the event itself. And this is particularly relevant for multifamily syndicators, because whenever the time comes that people can actually travel, I mean, you can now sort of, but the government's trying to scare us all to death again. They're all lying to you. Anyway, neither here nor there. But once the time comes that people are confident in traveling, actually for multifamily people, it really makes a lot of sense to actually take them to the location where your property is. And so that's step number 4, but you don't have to do that. That's just kind of an optional one. And then the 5th step is the close. Like I teach you exactly what to say and what to do to not only, the close is about getting them to sign on the dotted line and to write the damn check. I'm like, all right. This ain't theory. This is about getting the actual money in your bank account. Okay, so those are what the 5 steps are. I teach those, all 5 of them during the course of those 2 days. Most of the time we spend on the webinars because that is the key part here. And the beautiful thing, friends, is that you can do what I have shared with you tonight, even if you feel you're not eloquent, or if you are afraid to speak in front of audiences or something like that, because the beautiful thing is, because everything's scripted anyway, there's no reason in the world you can't just record it ahead of time and not even use it until you're happy with it. So like, you don't have to be eloquent. You don't have to be a really smooth speaker. You just have to write it all down ahead of time and record it and teach you how to do that. So that's a pretty good fit for people who want to learn how to raise capital or want to learn how to raise a lot more of it. And so if you're interested in that, shoot me a text at that number you see on your screen. It's not cheap. It costs $6,000 for that 2-day training. So it's not cheap. And I don't do it that frequently because I actually raise money for a living. And like, I do well enough from that is, I love to teach the seminars. I actually really like to do it, but like, I don't do it very much because thank you, God, I get checks in the mail a lot already, so I don't have to do that very much. But anyway, so that's the 50,000 foot overview. If you're interested in that, or if you happen to be one of the two people who are going to take one of those $135,000 slots, you can text me there too. But anyway, that's that. Was that what you were asking, Hutch?
Yes, sir. Greatly appreciated passing and sharing that information.
Thank you. Thank you.
All right. So before we get into the networking session, can everyone turn the camera on so we can take a nice, good selfie, this Zoom selfie? That'd be greatly appreciated.
Everybody's got to get themselves together, put the food down.
Let's get my hair straightened up. All right. Then that's it.
People are like hopping off. Like, I don't want to
All
be
right, 1, 2, 3. All right. Okay. Yeah. So really good information, man. And
Thank you.
As we all know, I think we see this with dealing with communicating with our children, communicating with our spouses. You know, everything has a process, right? You know, because not every time we saying things is actually considered as communication. You know, so it's really good to understand that concept whenever you're raising money from investors, because it's a big deal.
Sure. Absolutely. Well, thank you for having me. I do appreciate it.
Really appreciate your patience
we
and your
appreciate it.
professionalism
Yeah.
through the whole process.
My pleasure.
Yes, sir.
All right. I think Hutch is going to start up the networking portion of this. Bryan, if you want to stay around, maybe and hop into a room with someone, or if you got to go, just go. He does breakout room thing, and people are going to get randomly put in places. But
well, I've got a pizza that's going to be delivered here in a few minutes. I can stick around until then.
I love it. Awesome.
So we do say 3 rooms.
Sounds like a plan.
Okay.